Hi everyone, welcome to this live coverage. As usual, I'm here with Yohay Elam from Forex Crunch and Mauricio from FXStreet, and we are here to cover live the first release of the US fourth-quarter GDP. Sorry, and well, it's going to be an interesting one because we have durable goods orders alongside. How are you guys?
Hi Valeria, I'm doing great. Yeah. Looking forward to some action in markets, which is not only Trump.
Yeah.
Hi. Hi guys. Hi Valeria. Hi Yohay. How are you guys? Yeah.
Well,
agree with Yohay that looking something different from Trump.
Yeah, well, it has been a quite entertaining week. The first one he's been in charge at the office, right?
Yeah, the first time, the 45th president of the United States, Mr. Donald J. Trump. You know.
Yeah. Well, at least he's delivering what he promised. Americans can't complain about that.
Yeah,
that's the problem.
Yeah, during the campaign, we understood. Yeah, I mean, his voters took him seriously, but not literally, and the media took him literally, but not seriously. Now, should we take him literally because he's trying to fulfill all the promises and doing it in a very fast manner, extremely fast. So you can't blame him for not being consistent, at least during this week.
That's right.
Anyway, we are waiting, as I said, for the first reading of a fourth-quarter GDP in the United States. The economy is expected to have grown around 2.2% from previous 3.5%. Remember, that's an annualized reading measured by quarter. But as I also mentioned, we have durable good orders released alongside, expected to tick modestly higher after plummeting the previous month. And we have personal consumption expenditures also. So it's a bunch of first-tier data that we're going to get from the US. What can we expect, Yohay? What do you think?
The GDP release is the most important one because it's an overall look at the economy, and it's the first release, the most important one, most prone to surprises as well. As you said, we're expecting 2.2. This comes after the final reading for Q3 came out at 3.5. 3.5 is above average growth, but it came after 3 weak quarters of around 1.4% annualized. Remember, the figure is annualized, so now after 3 weak quarters, a strong quarter, we're expecting a return to the new normal, 2.2%, which is more or less the average of US growth in the post-crisis years.
Okay. I do believe that if the other numbers disappoint alongside with no matter how positive GDP could be, the dollar has little chances to go higher because despite this latest recovery we've seen coming from starting yesterday, it's still quite weak across the board. It's still far from being bullish and the strong momentum we had post US elections, right?
Yeah, so Donald disappointment.
Yeah, we need all the readings to be better than expected to see some dollar momentum building up across the board. And of course, if the numbers disappoint, the dollar will go back south, right?
Yeah. Durable goods order is always important as well, but I think GDP is a bit more today. Yeah, all in all, the trend, I agree, is against the US dollar now. First week of Donald Trump has been more about trade wars, less about fiscal stimulus, more about other things that aren't related, Obamacare, TPP. Well, TPP is also part of the trade war, so the dollar is a bit on the back foot in general.
At least he started a bit with that those infrastructure investments he promised, right? The controversial build of a couple of pipelines that go all through the US has been pretty much announced that, right, this week. So
yeah, they announced some executive order to start again the 2 pipelines, and it was a controversial, and also they have another executive order on the wall, but there is another controversy on who will pay that. And also there is more an economics matter will be the executive order that, well, the notification to the partners and to the Congress that the United States is planning to take out itself from the Trans-Pacific Agreement. That is the most economical matter that we can deal right now.
Yeah, but it was never signed, right? But it was it has been never signed, the deal, right, or approved by the Congress. But still, we have heard from Japan a couple of times saying that the deal will be useless without the US, right? So
also Canada said that.
Yeah, so he's pretty much killing the deal.
Yeah. Regarding the wall, on the other hand, we heard from Congress that they'll probably try to find some budget for it until the end of September, which means sort of cooling things down. But Trump, of course, is the number one person in the administration, the president. And regarding the Keystone pipeline, at least I don't know about the South Dakota one, but a Canadian firm, TransCanada, indeed applied once again. I mean, they want to get approval for it. But on the other hand, with the fall of oil prices, it's uncertain if it really makes economic sense at the moment. So let's see if this really comes into fruition, if it really becomes reality. So I have a bit of doubts about infrastructure.
Yeah, I think Trudeau, the Prime Minister in Canada, agreed with Trump not to push off the pipelines. So it will be, good for oil companies and oil prices and oil companies in Canada and the United States. Okay, so let's move to GDP. So what we expect for the GDP?
We have Theresa May flying to the States today, meeting with Trump, the first meeting between another country leader with Mr. Trump. So the pound, I don't know. I see that the situation Ms. May is faced on is a little uneven, because despite all of her self-confidence, the fact is that she actually needs the US after announcing the hard Brexit and that they are leaving the euro area single market, right? I do believe that on the other hand, we have a pretty self-paid of himself Donald Trump that will won't hesitate to say no if he has to, something he doesn't like. So it will be interesting for the latest pound momentum to see how the meeting goes. There are so much divergences between Trump and May, right? With all of these protectionist policies Trump is announcing, his comments on torture, on women, on everything that Theresa May has said that it was outrageous or something like that. But anyway, so I don't know. The pound recovered ground, indeed. It has reached this week a fresh monthly high, but it came to us quickly. I still believe that the pound is by no means able to gain bullish traction, serious bullish traction mid-long term, particularly because of upcoming Brexit, Another thing that could weigh much on the pound is that latest data has been modestly disappointing. I mean, we had a good GDP reading yesterday, but it was just one figure and slightly better than expected, nothing seriously impressive. And on the other hand, we have plenty of data showing that the Brexit fears have kicked in at the beginning of this 2017, right? Sorry, I talked too much, but
it's a few companies announced their plans to move workers away from London, and many, economists, the government, other institutions do believe that, okay, so far the British economy did not suffer from Brexit, but it'll begin suffering. I think that the actual triggering of Article 50, even if everybody knows it's going to be in March, it's still going to be meaningful, still going to be more than symbolic. And Brexit is still Brexit, and still worsening trade relations with the European Union, especially after Theresa May said last week that they're leaving the single market, leaving the customs union, going for a harder Brexit. So I can't see this as good news for the pound, for the UK.
Yesterday, I was reading yesterday that the government prepared the bill, the Brexit bill that the parliament should pass, and it has 180 words, 8 lines, something like that, something terribly limited. And it's giving the houses 5 days to talk or discuss it. So quite limited action that the parliament can have upon that, and that could make them pretty angry and fuel fears about what's coming from the UK.
Yeah. Pound has certainly been on the move.
Yeah. Anyway, yeah, go on. Sorry. Set up for
the euro dollar is unfortunately has returned to some boring stability, but well, not total stability, but we're seeing better moves in the yen and the pound, right?
Yeah, in the Aussie also.
All right.
Yeah, pretty much the euro has been trading within 60 pips for most of the week, finally breaking lower yesterday, but it's barely 30 pips below the range, so not much action going on in here. What seems a bit more relevant for me is that the price is back below the 38.2% retracement of the November-January decline, right? Around 700, 710. That's the Fibonacci level. And it seems a bit more vulnerable today for me. And of course, if US data comes out nice, then we may see a break of this 660 lows and the pair going back towards this 23.6% retracement, 565 for me. That's the region. And that will make the pair look even more vulnerable into the upcoming week. Of course, it's up to US data, no? Right?
Yeah, that's the main focus of the day and will dominate, of course, the close and perhaps the opening on Monday. I think there aren't any big events scheduled for Monday, so if we have strong readings today from the US, we can, I believe, see an extension of this greenback comeback, this recovery. But if we have mixed data, I think the dollar is on the back foot, and this includes the euro.
And Guy, what do you think about next week meeting between Shinzo Abe and Donald Trump in the White House? They will produce any kind of new agreement, bilateral trade or something like that? Or what do you think? What is your approach on that?
Valeria, you wanna?
You got me.
I can start if you wish.
Not ready to answer that. I didn't know they were a minute, to be honest. And I think that there can be less opposite. It can be more opposite one to each other. The fact that the US has leave the Trans-Pacific deal, as we were discussing, it's a huge hit for Japan, but it's also a trading opportunity both for Japan and China to conquer Asia, right? So I'm not sure what will come out of that. I will let Yohay speak.
Well, first of all, they already met after Trump was elected back in November. Abe came to Trump Tower. Abe has a style that he likes to flatter the other people. He talks very nicely to Putin, very nicely to Trump. But as Valeria said, there are big differences between them, not only on trade, and Japan really fought for TPP, but also on defense. Trump said during the campaign that he wants Japan and South Korea maybe to arm themselves with nuclear weapons. The United States sort of is disengaging itself from the world. We don't know that for sure, but that was Trump's campaign, and Japan doesn't like it, of course. So many difficult points over there. I think Abe will try to speak with perhaps other people apart, maybe talk nicely to Trump and try to get some deals with other people in the administration to continue the close relationship. But I don't know what to expect because Trump can be unpredictable. So.
Yeah, that's what I fear the most.
Another thing, the TPP was actually an agreement that tried to exclude China, as it included in the past 12 countries, including the United States, Japan, other countries around the Pacific, and excluded China. The idea was to first set the terms of trade, intellectual property, environment, corporate arbitration, other things, and then to have China join in. They wanted to weaken China's might, but with withdrawing from the PPP, I think that, as Valeria said, Japan could and China could find opportunities. Who else is he meeting with? I know that the meeting with Enrique Peña Nieto has been canceled.
Yeah.
Yeah, you know. We are heading to a war in Mexico or what?
Yeah.
I don't want to fight Mexico. I like mojitos and margaritas and tacos, you know.
Mexico, Peña Nieto is now in huge trouble. I'm not sure about this particular information because it came from a newspaper I read here. But yesterday I found out that over 70% of Mexican exports goes to the US, right?
Yeah, in the last year it was like a 75%, like a $600 billion of dollars.
Okay, so information is pretty accurate. So
yeah.
I don't know how Peña Nieto, what image is having, can afford fighting Donald Trump and not complimenting his requests. Honestly, they're putting him between a rock and a hard place.
It could be hard for both economies. Mexico is not a piece of cake. It's a big economy, you know. It's a big partner of the United States. And if they try to push Mexico too far, yeah, they will get hurt too. It's not like, okay, I'm going to push you and then give me all the money back.
Yeah, and Mexico is still a smaller economy, less population, less GDP, but and they'll suffer more than the US, but certainly American companies, now some cars are, parts of one car can be made in Ontario, in Detroit, and in Mexico. So I think it's going to hurt everybody if this kind of atmosphere continues.
Yeah, and it will be always the fight between Paul Ryan and Donald Trump. Paul Ryan is representing the status quo, you know, the old schools in Republicans, and they have to fight. Well, they always fight for their own interest too. So Paul Ryan will be not that easy guy with Donald Trump, I guess. So, and the United States, you know, the president have more power outside the United States than inside.
Exactly.
You know, it will be a bit more complicated. It will be easier to start a war than to start a punish like a
trade war.
Process, yeah, trade war. Yeah. You take my words. That's the reason, you know, that's the answer. Okay, we are 4 minutes to go. Initial or previous thoughts about the GDP, what we are expecting, what we can be a good reading or a bad reading, and what will be the most punished pair in any case, Valeria?
Well, anything above this 2.2, 2.4 would be a really good reading. Below 1.8 would be a really bad reading. And as we were saying with Yohay, right, that will push the dollar easily lower, because a bad reading, I mean, because it's still not strong enough to confirm the market is buying the greenback. So my take is that it will probably ease quickly against the Japanese yen and the euro and the Aussie particularly, right? If the dollar goes south. And also against the yen will appreciate the most if the numbers are outstanding. But I do believe that the market won't trade just the GDP figure. I do believe that if we have one good report but another really bad, goods orders or personal consumption expenditures also, the market will be in a wait and see mode, unfortunately.
Yeah, I think if we get sort of as expected GDP numbers, around 2.2, 2%, 2.4, then and we'll have a surprise in durable goods orders, a bad surprise or a good surprise. The durable goods orders will have the upper hand. But yeah, against the dollar, I think the euro and the yen are stronger, and the pound is somewhat weaker. So, but we'll know in 2 minutes.
Yeah, guys, if we should focus in one pair right now, what pair do you choose?
Dollar Japanese yen, sorry.
Dollar Japanese yen. And you, Yohay?
Agreed, the same. It's the pair that best reflects US releases. I will switch my chart to that.
Okay, you are 30 minutes chart. Okay.
2 minutes to go.
Yeah.
And what are your levels in the dollar Japanese yen, Yohay? I mean, what are the levels to focus?
I used to look at 116, but I'm not sure it's that strong anymore. And to the downside, 113.60 and more importantly, 112.50. Valeria, I think, follows this pair more closely.
I have my immediate resistance around 15.60, which is last Thursday, I do believe, high, January 19. Of course, the 16 figure, but I agree with you, it's not that strong. The 1660 is for me sort of line in the sand and a strong resistance level that the pair needs to break to move really higher. And if towards the downside, I see some immediate resistance support, sorry, around 1490, but a stronger one around 1415, then 14, not expecting much more than that.
1.9 is the number.
1.9.
Yeah, it's a miss.
A bit, yeah, less than expected. OC is running, Euro is running, Yen is running.
Also, headline durable goods orders is a miss, a drop of 0.4 instead of a rise of 2.6.
Then the euro will probably break above 17 and stay back above the level. That's Fibonacci.
Core orders are at 0.5, actually with an upwards revision. But the rest of the data is, well,
tepid.
Yeah. Yeah, headline GDP, headline durable goods orders are both weak. We're seeing dollar yen falling.
Yeah.
And durable goods order fall 0.4.
Yeah. So euro dollar is above 107. Pound dollar not doing too much. Dollar yen, as we said, is falling.
So initial reaction is dollar weakness.
Yeah. Even gold is covering some ground.
Like, check what's
Dollar yen is extending its falls.
Pound is a bit more tepid, the recovery in the pound.
Yeah, the dollar index is falling.
Stocks are barely reacting to news, retreating modestly, but it has been a quiet day for stocks all across the board today.
Yeah, after an exciting week. Let's see the composition of GDP as well.
really tepid advance.
1% of the GDP was added by inventories.
Sorry, inventories pushed.
Means 1% of the GDP.
They added 1% to GDP or took away?
Added.
Added, so it's even worse news because when inventories go up one quarter, they go down the next one. So
yeah.
So that's bad news.
Yeah, but market seems not really willing to sell the dollar yet because take a look at charts. They are holding some of the supports levels and resistance we mentioned, not really momentum against the greenback it's seen right now. Dollar Japanese euro dollar, sorry, reached that 710 I was mentioned. Back a little, back below 700. Not really something meaningful at this point because we are 10, 20 pips away and moving. Market has not yet made up its mind of what's going to do next. But the dollar Japanese yen is also pulling back. Pound.
The GDP was generally weak. Headline 1.9 worse than expected. Lots of inventories contributing to that 1%. Consumer spending was 2.5% as expected, more or less. But the durables goods report, the headline was poor, but the core numbers are looking better, so it's not all that bad.
Not that bad. Okay.
But inventories.
The chances of a dollar rally are quite limited after this data. We have still pending off the list the Michigan consumer confidence sentiment, right? A couple of hours, so yeah, that would it'll have the dollar run higher through its weekly highs.
Ariane already 115, almost there right now. 115.
What? Sorry?
Oh, in dollar yen.
Sorry.
Racing its losses. Part of its losses. Oh, Dorian falls again.
Okay. I'm looking at it. It says US economic growth codes on biggest trade drugs since 2010. That's Bloomberg headline. And the person tweeting says, "Give me some protectionism. What can possibly go wrong?" It's the best.
Who say that?
That's Yanis Christomitis. It's a Greek
Okay.
journalist.
Okay. I know him, yeah.
He's great. He had been covering Brexit earlier last year. Super duper good. I just retweeted anyway because I love him. He's amazing.
And also remember, guys, that we will have this is the first release, and usually we have revisions.
What?
That this is the first release, and usually we have revisions in the first revision in the
advanced figure. We have one revision next month. Sorry, by this time of month, another in 2 months. But usually the first one is the one that makes the market react the most. The last pretty much does not move the market because the second is it's setting the tone. The first one was accurate or not. But still, I have never seen huge divergences. I don't remember one from 2015 when there was a 0.8 and it was revisited to something like 3%. It was wild and crazy, but that's not really common, right? I'm exaggerating a bit, maybe the numbers, but we have one in 2015, one time that it happened, and the first reading was 0.8, the second jumped to 3%, and something like that. That is uncommon, really uncommon.
Yeah, usually the changes are 0.3, 0.4%.
Yeah. In fact, at that time, people suspect there was some growing those figures.
Yeah. Maybe the second release will show that the economy grew by an annualized rate of 2.2 as we expected today. That's, I mean, a normal revision. So dollar raises losses, no? Almost.
Yeah, slightly weak, but nothing really serious, nothing really relevant. Pound is at risk of giving up more ground. Pretty disappointing market behavior, because I guess the market is willing to buy the greenback, but this news were not enough to provide them an excuse to do so, and that's why we're seeing this tepid behavior across the board, right?
Yeah. Well, in Eurodollar, we're back to the pre-release levels. So
Yeah.
indeed, a disappointing reaction, non-reaction.
Other Japanese yen also.
Yeah.
Gold is also giving up gains and under pressure. Stocks saying nothing, confined to 20, 30 points range. Pretty much nothing's going on. As I said, I believe the market really wanted to have an excuse to rebuy the dollar, and struggling with itself right now.
Okay.
Let's see if we have something to add.
Looks like markets want to hear something new from Trump and ignore the indicators, no?
Seems so. I'm not sure if we have a certain time of the day when Theresa May is meeting Donald Trump. Do we have it?
I believe there is a schedule for this. I saw that now she's visiting Washington, went to Arlington Cemetery, but so I guess it's maybe relatively soon. She's in Washington. Let's see, White House schedule.
Okay. Yeah, we have only pending Michigan sentiment, right?
Yeah.
Yeah, it's a revision. Right?
Yeah.
Yeah, there's look at that. The Australian dollar is completely back to previous levels.
Gold is okay. Gold is pressuring the lows, so beware of that because it could help the greenback recover farther against it.
The dollar Japanese yen is right testing heights.
Yeah.
Look at that. The euro Japanese yen is breaking up.
Yeah, because of the yen weakness, with higher yields.
Bless you.
Thank you.
Yeah, the futures, the equities in futures are
But not doing much.
slow. Yeah, it's really slow. They were pointing on a green opening, but right now they are flat or red.
Yeah, a couple of points up and down from yesterday close, but nothing really serious going on in there. Actually, nothing is really breaking higher or lower or given signs that they will grab up direction. The only thing that's a bit of signaling some upcoming dollar strength is gold, which remains under pressure. That's the most I can see right now. Really, really honest. Nothing really interesting in the forex market.
So, Valeria, in your opinion, I'm sorry, go ahead.
No, sorry, I said how awful it is to say that. There's nothing interesting going on.
Yeah. Well, in your opinion, what is the trade to do now? I mean, what is the most? I mean, yeah, I know the dollar is the strongest, but what is the weakest now? So, what is?
I believe that the one given a bit more opportunities could be Euro Japanese yen because the euro is holding around and the yen is weak. I could wait until the US opening and see how stocks and yields react to that opening to see if I can have close on further yen weakness. And in that case, I believe the process, Euro Japanese yen, also Japanese yen, would be the most interesting to trade.
Okay. In your opinion, Yohay?
Yeah, euro dollar is a bit went back to its frustrating self. Dollar yen certainly more interesting, and pound yen, of course. Pound dollar, also pound yen, but pound dollar with all the Brexit and Trump all together in one pair. Much higher volatility. And today's meeting also between May and Trump, it'll be held at 12 and 10 minutes local time, so that's 5 and 10 minutes GMT. And then there's a press conference afterwards at 1 local time, 1 Eastern. Yeah, Aussie dollar did wake up a bit. It had a relatively boring 2016, but I think pound dollar is currently my favorite in terms of volatility.
There it's the yen breaking lower against the dollar. Dollar to 10 pair higher.
What about the Australian dollar?
It's holding around, as you had said, not much interesting moves in there. It lost the upward momentum it had at the beginning of the week, but a break lower seems so far limited. I would like the pair to see it. I would like to see a pair below 24.50 to consider a bearish trade.
Okay, let me know if we have any other question. No, we don't have questions. Go ahead, Yohay.
No, just Aussie dollar is sort of stabilized above 75 and between 75 and 76. We had lots of data from Australia, from China, Chinese GDP, Australian jobs report. I think next week we have the first RBA decision of the year, because they don't have a meeting in January. So hopefully the RBA can move the needle there in Aussie dollar.
Interesting. Okay, guys, let's do a wrap up. Let's explain people what's happening today and what will happen in our opinion, well, in your opinion, Valeria, and in your opinion, Yohay, what will happen in the next week, and what are the main levels to watch on the best pairs to focus in the upcoming days. Valeria?
Okay, well, we have two main readings in the US. First quarter GDP, durable good order, sorry for December, both were missed. Still, the dollar is unable to give up ground. In fact, it's trying to regain its positive momentum. Most of it is coming from the return of what the so-called Trump trade, right? With confidence of coming policies coming from the new administration, boosting growth and inflation in the country. But the unconvincing figures have left forex traders a bit clueless ahead of the US opening. Anyway, I can't see the dollar really bullish right at this point, according to what I can see in charts. But seems it's going to hold some ground, and investors are not willing to sell it back. For the next week, I do believe that despite it will be a non-live meeting, the focus will be in the Fed and market trying to look for clues on if they are going to rate hikes till June and December, or we are still thinking on 3 rate hikes for 2017. But that's just a part. The market is pretty much focused in policy, and Trump warning will be on top of the list when it comes to market movers. And for the rest of the day, as I said, there's a bit of dollar demand, and that's it.
Thank you, Valeria. And there is a break news that is coming up. There is Trump, well, Spicer, the press, the press of the White House, press secretary, sorry. He's just saying that Trump will meet tomorrow, well, we'll talk tomorrow with François Hollande and Angela Merkel.
Okay.
So.
Okay. I think he's also expected to talk to Putin on the phone, Vladimir Putin.
Yeah. It will be a big. Yeah. Okay, Yohay, your approach on today and the days to come?
Yeah, so as Valeria said, a miss on GDP. 1.9 is the headline, under 2.2. Underlying figures don't look good, with inventories contributing too much, 1%, to this growth rate. Durable goods orders, that's where the good news come from. So yeah, a big miss on the headline, a drop of 0.4, but the various measures of core durable goods orders actually beat to the upside, with the core figure, the ex-defense, ex-air beat to the upside. The core was as expected, but with an upwards revision. Anyway, I think what we're seeing more is some kind of, first of all, we're not seeing too much, an initial drop in the dollar and now a recovery. But I would see it more as a correction to the dollar weakness this week, less a return of the Trump trade, I think. So far, after almost a full week in office, markets are a bit disappointed from Trump. The dollar fell and now makes the necessary correction. Next week, big events, also a rate decision in Japan. For me, the most interesting rate decision is from the Bank of England, because it's a Super Thursday. They also released their quarterly inflation report. And on the other hand, for the Fed, it's a less important meeting because there's no press conference, no new forecasts. And of course, next week, we also have the non-farm payrolls. So if today's reaction to the figures, the important GDP release, was quite disappointing in terms of volatility, I believe next week will not disappoint us, and we'll have so many big events to rock markets, in addition to political news. So hope for more excitement. All in all, January was not too bad. Only today is a bit disappointing. So let's see how February begins.
Yeah, that's right. Not from payrolls. Next week will be a key. You know?
Yeah.
Okay, guys. So thank you very much for coming today, Valeria and Yohay. It has been a pleasure. It has been a Trump pleasure. You know?
Same here.
Tremendous.
It has been huge, tremendous. Yeah, it has been a Trump pleasure. Okay, guys. So see you next week in your shows. Thank you for coming.
Yeah.
Okay.
Thank you, guys. As
Thank
usual.
you. Trade safely.
Bye-bye.
Bye. Trade safely. Bye.